Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is April the 10th. Of course, we've been through a huge market downturn. I've just returned from a financial conference. One of the interesting observations that I made and shared with some of the people on X, where I'm quite active, just ranting and raving, was that the majority of the comments from the conference, the financial conference that I attended, was where to invest our money. Do we put it into real estate? Do we buy stocks, bonds, whatever the case might be? Um, Very little talk about all this turbulence going on in the market. No talk at all about cryptocurrencies. Very, very interesting. Obviously, it's a current topic, but it almost seemed as if the few hundred attendees, and there were several hundred, maybe even in the high hundreds, 800 attendees at the conference. If you collectively look at the group of attendees, you'd say, these people in total have lost hundreds of millions of dollars in the past week or so with the market downturn. And all they were really were interested in discussing is where do we allocate capital, or do we have enough cash to stay on the sidelines and ride this wave until eventually the market turns again, whether that be in the next week, the next month, the next 1 year, whatever the case might be. If you're in real estate, obviously your assets are illiquid anyway, from the point of view that you can't sell them quickly and exit quickly. If you're in the stock market, you probably don't want to sell them quickly. But that's a quick wrap on that. What I wanted to do, just very briefly, is I just want to share some housekeeping with you before I go into the topic of this particular video. A couple of weeks ago, I made a video on how to file a K1 tax form, and there are lots of comments, and quite a number of people have watched this video. Um, but the interesting thing here is that some of the comments, so like for instance, Rob here said, if you're entering a K1 and it reports amounts in more than boxes 1, 2, or 3, then you should treat each activity separately in TurboTax, which really means you have to file a separate K1 for box 1, box 2, box 3. That doesn't mean you have to repeat the information that is in box 1. When you file another K1 for box 2, you basically are just recording the information that is in box 2. The other thing that Rob asked here, which other people asked as well, is do you bother filling out the K3? Now, that one, the answer is sort of, it depends. Sometimes the K3 has information that you need to enter, and sometimes it does not really, or it's not really material, or it's just informative. The other thing that's interesting about that is that the K1 that I was sharing when I was making the video was for energy transfer, and their K3, which is an amendment, is only going to be available in June. So we're still 2 months away from that. So if you want to file a K3, it would be an amendment to the taxes that you have already filed. Chappie asked a couple of questions, and his questions became rather complicated because he was referring to box 20 on the K1, saying, does it have a Z or a Z in the box? And mine didn't. It just had a little star that said in box 20, STMT, which means statement. And anyway, his questions became rather complex. So what I did was I provided a very complex answer and response. So if you are struggling to file a K1, you could probably watch this video and also maybe read some of the comments in the video, because there's a really good chance that the question that you may have as it relates to the K1 has already been answered. And as you can see, as I'm scrolling here, I've been very active in terms of sharing that information with you. Well, what I want to do in this particular video is talk a little bit about 5 energy stocks that on April the 4th, so just a week ago, I said you could probably buy right now. Now, when you look at the actual stocks, and let me just quickly open this presentation, and I'm not going to spend too much time revisiting what I shared with you before, but I wanted to sort of loop back on this one, right? Because obviously the market has crashed, and we're all impacted by that. Pretty much anyone who owns any stock is impacted by that, because the crash moved from a correction, which is about 10%, to a bear market, which is about 20%, depending on where you are and what you are invested in. Now, it just so happens that just prior to this big stock market crash, which many people would say was prompted by President Trump's announcement of tariffs globally, affecting pretty much anyone, anywhere in the world, um, was From a timing point of view, I actually made this video saying that these are 5 energy stocks you could probably buy right now. So I thought what I would do is take a few minutes and just revisit it. And what I'm going to try to do is avoid repeating any of the information that I gave you before and just add some new information. And then at the end of this video, I'm going to share with you just a couple of points as to why energy stocks specifically, and more importantly, the energy futures or oil futures are actually declining. So let's just go into this, and I'm not going to go through this in detail because it's in the previous video. I told you why you could possibly buy Exxon, and I showed you a snapshot of their chart. Now, when I took this particular snapshot, you would have seen that you could buy Exxon at $113. This was on April the 4th. Well, today you can buy it at about $100. So now it's even more on sale than before. In fact, in the last 5 days since I made that video, it's down another 11.12% as of the close today. But now, if we look at the numbers here, and remember, I mean, the benchmarks that we use in terms of trying to make a buying decision are fairly consistent, right? We want to look at the fundamentals, and for sure, you should take some time out to familiarize yourself with their balance sheet and look at their cash situation, their debt situation, etc. But as a snapshot, what we want to do is look at a couple of things, right? So the first thing and most important thing, and probably pretty much anyone who trades stocks looks at the PE ratio. Right now, we want to be under 15 for sure. Exxon, even at its current price at $100, is actually just sneaking in slightly below 15, right at 12.75 or almost 13. It looks like it could potentially be a good buy at $100 for sure. It's a better buy than what it was a week ago at $113 because you're getting an 11% discount straight off the bat. Now, of course, tomorrow it might be trading at $95, and then hopefully I won't have to do another refresher video again in a week from now. But when you look at the other numbers for Exxon, the dividend yield, which is $3.96, expressed as a percentage from the stock of the stock price, is 3.8, so it's almost 4%. That dividend yield, if you can reinvest it, is actually a nice little hedge against the stock decline, which obviously we've all been suffering. And then you have a 1-year target estimate, you have $127, which really is completely insignificant or irrelevant because as the market crashes or as the market booms, analysts will just readjust their targets. So don't pay too much attention to that one. But your first buying indicator for sure is the PE ratio. And right now, Exxon looks a little bit better than what it looked just a week ago. Chevron was another one that I covered. Same thing here. So a week ago, we had a price of $156, and now you can buy it for $134. So you got a $22 discount, right? Just in the past 5 days, it's down almost 14%. So one of the things that's interesting to observe here, when I follow people who are much smarter, certainly much more intelligent than what I am, and they have greater resources and a much larger team, are the people who manage XLE, which is an ETF I talk about quite a lot, right? So in XLE for several years, the top 40% in terms of their top 10 holdings was 20% Exxon and 20% Chevron. Right now, they're at about 24% Exxon and 16% Chevron. I'm not absolutely convinced or sure that I know exactly why they would have made that decision because obviously I have no insight into how they make their fund management decisions. But the fact of the matter is they've increased their holdings in Exxon in the top 10 from about 20 to 24 and decreased Chevron from about 20% down to about 16. So there's an 8% delta between the two. And obviously they prefer Exxon. So for that reason, without going into much detail here, I'm going to say I probably prefer Exxon to Chevron as well, despite the fact that you can buy Chevron now at a discounted price. The PE ratio, not as good as Exxon, right? So that might be one of the indicators, but you need to dive a little bit deeper into this if you're prepared to put your hard-earned money at risk in any of these stocks, right? Beautiful dividend here, almost 5% based on the current stock price, and the 1-year estimate on the target price is $176. And as I said in the previous slide, you can ignore that one too. The next one was Shell, right? So you could buy Shell a week ago for $70, and right now you can buy it for $60. So you got a $10 discount straight off the bat, right? How about this one? In addition to the 15% discount, it has a PE ratio of only 11.81. So of the three right now, Shell looks better than the other two. For sure, depending on your jurisdiction that you're in, you might prefer one over the other because obviously Shell is traded on the London Stock Exchange and headquartered in the UK, whereas Exxon is headquartered in the US. So on that one, you probably have to take a little bit of geopolitical macro risk into consideration as well, and ask yourself whether you want to support the madman in the US office, Trump, or the other guy who's the madman in the UK office, Starmer, right? I'm not too sure, but you can make that decision for yourself. The dividend yield on this one is $2.86, which is currently yielding 4.5. So it's got a beautiful dividend here as well, sort of almost in the range of Chevron. The 1 year target date on this one, $74. Once again, ignore that one, but it's nice to look at anyway because it makes you at least feel a little bit warm and fuzzy for a short period of time. Total Energies, I told you why you could possibly buy it. This one's headquartered in France. It's a French supermajor. A week ago, you could buy it for $62, and now you can buy it for $54. So you got about an $8 discount on this one as well. It's down 12% over the last 5 days. It's got a PE ratio of only 8. So now Total Energies has moved from being a buy potentially to being a screaming buy, depending on whether you could stomach the risk of owning anything French, right? So I mentioned Trump and Starmer. How about Macron, right? I don't know. I don't really have an opinion on that, but it is a macro and geopolitical risk you want to take into consideration. How's this dividend? 6% on an annualized basis, paying you $3.51 in dollar terms. 1 year target price, $71, currently trading 54. Looks like a buy, right? But who knows? Tomorrow you might be able to buy for $45. The way the market's going, we don't know, right? The last one is ConocoPhillips. I told you why you could possibly buy it. A week ago, you could buy it for $96.46. And today you can buy it for $83.29, right? So you got another $13 discount here. It's down 12.5% from when I made the video last week. But look at the PE ratio down here, very attractive, 10.66. The dividend yield is not too bad. It's $3, which is currently yielding at about the stock trading at $83, 3.62, and it's got a target price of $126. If the analyst target price holds on this one, that's quite some upside, right? So it's almost $50 from where it is trading right now, $83 to $126. It'll be interesting to see if it gets there or not. Of course, the way things are going, we don't know, right? You might be able to buy ConocoPhillips tomorrow for $75, or otherwise tomorrow it might be trading at $100. Who knows? Nobody does. Remember, once upon a time they asked JP Morgan, what is the market going to do tomorrow? And he says it's going to go up. And if it doesn't go up, it will go down. Anyway, that's ConocoPhillips. So let's talk a little bit about this and then I'm going to wrap it up. So demand. As of today, which is April the 10th, the most current estimates suggest that the global oil consumption is around 103 to 104 million barrels per day. The reason why that is of interest to us as energy investors is because every single day we use a little bit more than what we used yesterday, and the day before that, and the day prior to that, and the month and the year prior to that, right? So the consumption of oil is increasing every single day, incrementally, little by little, day to day to day. We just consume a little bit more than the previous day. I can tell you with reasonable confidence that most of the oil fields in the world have not even been discovered yet. And for an alternate opinion on that one, look at the incredible oil find that was discovered off the coast of Guyana in the northern part of Southern America, the South American continent, just a short while ago, which is now kind of turning into Guyana, of all places, as one of the fastest growing economies in the world. This economy is growing from on a GDP basis at about 23% per year. So huge growth. And where did it come from? The ocean. And who's mining it and sort of extracting it? Mining Exxon. One of the minority partners in that relationship is Hess. And Hess is in the process of being acquired by Chevron. And so there's a little bit of a battle going on there as well. Interesting stuff. But anyway, it has suddenly made Guyana leapfrog the entire rest of the world from being a very, very poor country to being a really, really wealthy country in the space of perhaps 2 to 3 years. The figure, 103 barrels or so, is based on recent forecasts and data from sources like the EIA, which is a little bit of propaganda, but anyway, I'll take it for where it comes from. March 2025 short-term energy outlook estimated global oil demand at approximately 103.31 million barrels of oil per day. That's where I get the number from, 103 to 104. Whether it's absolutely accurate, I don't know. Nobody really, really knows because it's very, very difficult to track it right down to 1 million barrels per day or thereabouts. It's very difficult to get an absolute finite number on that, especially on a day-to-day basis, and especially with the volatility in demand and supply that we experience every single day. Given the dynamic nature of the oil markets, consumption can fluctuate slightly due to economic conditions, geopolitical events, and seasonal demand. But this range above 103 to 104 million barrels per day provides a solid estimate based on available data. Um, some years ago, I think it was in the 80s, T. Boone Pickens, the Texas oil billionaire, wrote a book saying the first billion is the hardest. At that point in time, we were consuming approximately 85 million barrels of oil per day. And T. Boone Pickens, who was also much smarter than me, suggested that there's no way that shale oil, the kind of stuff we get from the Permian Basin, uh, primarily in the United States, would ever be able to replace the deep sea drilling and land-based wells that had been sort of common or most common up until that point in time. Boy, was he wrong. And as I just said, he was much, much smarter than me. So let's take a quick look here and I'll wrap it up. Why is the price of WTI dropping? Well, even if the demand remains steady, the price of oil can decline due to factors on the supply side or broader economic dynamics. Right now, there are several elements in play. Global oil supply might be increasing, potentially outpacing demand. For instance, non-OPEC countries, OPEC plus countries like the United States, Brazil, Guyana, that I just mentioned earlier, and Canada have been ramping up production, with projections suggesting an additional 1.5 million barrels per day so far in 2025. How much is 1.5 million barrels per day? Well, that's almost the entire output of an organization like Occidental Petroleum. All right. So that's almost like adding another Oxy's production to the supply chain. And it's quite material and it's quite significant, right? In addition to that, OPEC Plus has recently unwound some of its voluntary production cuts. Just a few days ago, in fact, from a timing point of view, around about the time I made the previous video saying these are 5 super majors you could probably buy right now, the very next day, OPEC announced that they would unwind some of their voluntary production cuts, which had been in place before, potentially adding more oil to the market. And if the supply grows faster than the demand, even if the demand holds steady, prices tend to drop due to basic economics of oversupply. Why is it dropping? Page 2. And this is the last one. Market sentiment and economic uncertainty, right? There's fears every single day we see in the news. We see it on TV. Do you guys still watch TV? My cable isn't even plugged in. But anyway, every single day we see news that there might be another global recession. Will there be a global recession? Who knows? Some people say we are already in a recession. The old definition of a recession is 2 consecutive quarters of negative growth. Now, of course, you could say we already have had 2 consecutive quarters of negative growth, but the people who provide these numbers to us pretty much lie all the time. So you actually don't know whether their numbers are accurate or reliable. And certainly you shouldn't pay too much attention to that at all. How does it feel like to you? Are we in a recession, or are we going into a recession? Or is there perhaps no chance of a recession, or maybe just a slight one? You can let me know in the comments. I'd be interested to know what you think. Escalating trade tensions. I was trying as best I could to sort of avoid the topic of tariffs, right? But anyway, I'm just going to leave it at this, right? So the trade tensions between the United States, tariffs on major oil suppliers. Who are the major oil suppliers other than the United States? Well, everybody. It seems as if the only country that escaped tariffs entirely was Russia, and that's probably because they're already severely sanctioned. Pretty much everybody else is part of Trump's tariffs, and the level or the severity of the sanctions, obviously, sorry, the tariffs have obviously been fluctuating and almost changing every couple of days. That's why we had this huge bounce in the market just yesterday, which almost seemed to me like the 1 minute break that you get in between boxing rounds, right? So we were getting body blows and getting beaten down, and every single day we're just getting punch drunk. And then suddenly we got this little reprieve, which is like the break between 2 rounds for two prize fighters, right? That was yesterday. And then today, we're just back in the ring again, getting bruised and battered and body blows thrown at us, right? But anyway, these tariffs for sure are weighing on expectations. But the traders will trade, right? I can remember because if you're an old guy like me, If you were around when, people like Clinton or George W. Bush were in the office in the United States as president, you know, uh, I remember at one stage, the press corps was asking George W. Bush, what's going on with the oil price, specifically WTI? And he said, well, traders will trade, right? That's what traders do. I've suggested in the past, kind of jokingly, obviously, but to a degree, it might be true, that some of the largest oil companies on the planet are actually not companies like Chevron and Exxon, Shell, Total Energies or ConocoPhillips. It's actually companies like Goldman Sachs, Morgan Stanley, etc. They're the real traders. What do? They anticipate weaker future demand, and even with the steady current demand, they will sell off the oil futures and push prices down. We are experiencing that right now, or at least some of it anyway, more so than the things I mentioned above, other than tariffs. Geopolitical developments might also be softening prices, while sanctions on Iran and Russia could tighten supply. The market seems more focused on the prospect of ample spare capacity. This perception of a well-supplied market can keep prices in check, even if demand isn't falling. So, guys, in a nutshell, that is sort of a recap on last week's video where I said these are five super majors you could possibly even buy right now. Now, of course, my narrative is fairly consistent from the point of view that pretty much any of the stocks that I talk about anytime is always at least sort of a 3 to 5 year hold, right? If you're day trading, my channel is not for you. And if you want to buy stocks and maybe sell them a few days later, even if you're not day trading, if you're trading in and out of positions, my channel's probably not for you either. What I like to do is find undervalued stocks that you can buy for an extended period of time. I'm quite confident that even if you bought some of these energy stocks last week, and by the way, I did, I purchased and added to my existing positions on Exxon and Phillips 66. Even if you purchased it at a higher price than where it's currently trading, as long as you're prepared to hold it for about 3 to 5 years or so, you're going to be okay. Unless you're buying a company with poor fundamentals, as a general rule, you should be okay. Some of the people at the financial conference that I attended this past week were talking about real estate, and they were saying, if we go into a recession, if the prices of real estate drop significantly, if we have too many vacancies, et cetera, et cetera, et cetera, right? All the things that go sort of hand in glove with owning real estate, right? So you got to manage tenants, you got to deal with vacancies, you got to do maintenance and repairs, you got to face increased property taxes, increased insurance, all that kind of stuff, right? The most critical comments that they raised during the discussions was, do you have enough cash in reserve to tide you over for perhaps a year or two? All right. Do you hear what I'm saying? If you can hold it for like 3 to 5 years, I'm talking about the stock. And the real estate people are saying if you have enough cash in reserve to tide you through the storm for about a year or two, you're going to be okay. Now, the interesting thing there is that if the stock market suddenly turns and shoots up and gets better, obviously we'll all be happy. And so will the people who own real estate. But if it does not happen that way and we go into a prolonged recession and it lasts a couple of years, make sure that you have sufficient cash in reserves in order to tide you over through that difficult period. And on that note, rather than critiquing the market activity in general and tariffs as a macro theme, I'm going to leave you for this video and say thanks for watching. And I hope that you tune in again and we see each other soon. I look forward to your interaction in the comments, and I will talk to you all soon. Bye bye.